Good evening, everyone.
Good evening, sir.
Good evening.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Yes. Yes, come on, switch on your cameras quickly. ಜೀವಿತ ಸೆಕೆಂಡ್ ಡೇ ಕಂಟಿನ್ಯೂಸ್ ಕೀಪಿಂಗ್ ವಿಡಿಯೋ ಆನ್ ಏನೋ ಇವತ್ತಾಗುತ್ತೆ ಮಳೆ ಬರುತ್ತೆ ಮೋಸ್ಟ್ ಎಸ್ alright you are revised whatever was taught yesterday completed yes all the chapters done no it's okay I hope I hope you're not wasting time but you're reading at least yes you're reading right studying right all right just 2 chapters left my portions after that you know who will come yes all right okay next chapter inventory is one of my favorite topics which will be there like I said in all the 3 levels you'll have it in your inter also and then in final also extremely important topic let us start all right what is inventory let's start right from the definition itself I know that you will know half and half so I won't attempt asking you guys I will straight away teach like I'm teaching for the first time correct thank god ante ellaru helpidira yes all right inventories are what inventory is what asset held first of all it is an asset held for sale in the ordinary course of business correct it is asset held for sale in the ordinary course of business which means what maybe finished goods stock in trade etc it is held for sale all the assets which are held for sale in the ordinary course of business is called as inventory or in process of production for such sale which means it is my WIP remember in process of production for such sale means it is work in progress right first part of the definition it is what my finished goods or stock in trade second part of the definition it is work in progress so I repeat inventories are asset held for sale in the ordinary course of business or in process of production for such sale or for consumption so first one is stock in trade and finished goods second one is work in progress what is held for consumption raw materials yes very simple to remember the definition of inventory andid takshana what you know what are the inventory items right raw material is an inventory finished goods is an inventory stock in trade is also my inventory work in progress also in my inventory only thing is put it in order first is completed then half completed and then in the initial stage itself that is how it is kept in the definition clear yes so inventories are asset held for sale in the ordinary course of business or in process of production for such sale or for consumption in the production of goods or services for sale including maintenance supplies consumables other than machinery spares servicing equipment and standby equipment remember this definition now yes start you didn't know but now do you recall yes I told you guys right machinery spares all these machinery spares means what your plant and machinery for that you have some spares and everything kept that you don't count it as a part of my inventory yes that will form part of my fixed assets clear machinery spares will not form servicing equipment all the equipment which are kept to service the finished goods etc all the servicing equipment that also will not form part of my inventory any standby equipment kept that also will not form part of my inventory clear all this will form part of what will form part of my fixed asset itself yes can we write down the definition now yes write down inventory write down the heading as inventory inventories are assets held put a colon and then write down point by point first point for sale in the ordinary course of business for sale in the ordinary course of business or in process of production. Write this as a next point. Okay. First point is what? for sale in the ordinary course of business. Next point, or in process of production for such sale, in process of production for such sale, or next point, for consumption, in the production of goods, for consumption in the production of goods or services for sale. For consumption in the production of goods or services for sale, including, next point, including.
Sir, could you repeat this point again, sir?
Yes, I will. So, first point is for sale in the ordinary course of business. Second one is for in process of production for such sale. Third one is for consumption. Okay. In the production of goods or services for sale. That is the next point. Okay. After that, next point, including maintenance supplies and consumables. Including maintenance supplies and consumables. Yes. Other than, next point, other than machinery spares, servicing equipment, and standby equipment. Machinery spares, servicing equipment, and standby equipment. Clear, all of you?
Sir, can you repeat this point?
Yeah. Other than this point, right? Other than machinery spares, servicing equipment, and standby equipment. Clear? Yes, that is my definition of inventory. So very simple to remember. First one is what? You should remember stock in trade and finished good. That means it is held for sale in the ordinary course of business. Second one is it is work in progress. In process of production for such sale. Next one is raw material that is held for consumption in the production of goods or services for sale. Then it includes maintenance supplies and consumables, excludes or other than machinery spares, servicing equipment, and standby. Clear, all of you? Yes. And then we learned what is included in cost, how do I value inventory, etc. Okay. So as per your accounting standard 2, valuation of inventories, inventory is valued at cost or NRV, that is net realizable value, whichever is lower. Remember this? Yes. Cost or NRV, whichever is lower. And there we learned cost includes your cost of purchase. Yes. Cost of purchase, what all does it include? Your purchase price, duties and taxes, which is not recoverable from government, freight inwards, right? Other cost, which is directly attributable to bringing the asset to its present condition and location, etc. Yes, all of this is included in the cost of purchase. It excludes your trade discounts, correct? Any rebates given, duty drawbacks, etc. Yes, it excludes any government taxes for which can be recovered. Yes, for example, if the input credit of the GST is available, then it will not form part of my cost of purchase. Clear, all of you?
Yes, sir.
Yes. So this is cost. Also, that is the purchase cost. Next, it includes cost of conversion also. What is cost of conversion? That is converting raw material into your finished goods. One is the raw material cost. Yes, that is the purchase price. I told you what all it includes, what all it excludes. Next is cost of converting the raw material into finished goods. There, direct material, direct labor, and all overheads relating to production is included. Yes, the direct material, direct labor, and all overheads or all my indirect cost, which is related to my production, is included. Then there are certain things which are excluded from the cost. Interest and borrowing cost or finance cost is excluded. Yes, interest, SAF, remember SAF, selling, administration, and finance. I've given this shortcut to remember during the regular classes. So that is interest and borrowing cost, selling cost, administration overheads, until and unless it is required for bringing the asset to its present location and condition. Yes, that is an exception. Otherwise, generally admin cost is not included. Yes, abnormal costs are not included, and any storage cost will not be included unless it is necessary for the next production process. Clear? Unless it is necessary for the next production process. Right? So all of this also we had learned. That is included in my cost. Remember? Able to recall all of you? Yes? Next, cost or NRV, whichever is lesser. So we learned what is cost now. Yes. Now let us understand what is net realizable value for different inventory items. For finished goods, my net realizable value is what? Selling price minus estimated selling expenses. Yes. Estimated because I've not yet sold. Correct. Selling price minus my estimated selling expenses. For my finished goods, it is NRV, net realizable value. Clear? Yes. For work in progress, it is selling price minus estimated selling expenses less estimated cost of conversion. Yes. What is the difference between work in progress and finished goods? Finished goods, I can readily sell it in the market. Yes. Work in progress, even if I sell it, I'll have to convert it, correct? Or the person who is purchasing will have to convert it. Therefore, for WIP, the differential is same thing. Selling price is same. Minus estimated selling price is same. However, one additional point to be mentioned here is less estimated cost of conversion. Clear, all of you? Yes. So this is my NRV for work in progress. Next, NRV for raw material is normally valued at cost itself. Yes, normally it is valued at cost itself. However, it is valued at NRV when two cumulative conditions are satisfied. That is, the cost of the raw material is greater than the NRV of the raw material. Clear? Cost of the raw material is greater than NRV of raw material, then you'll evaluate NRV. All of you are understanding. Why? Because cost or NRV, whichever is less. Correct. Therefore, for raw material also, if the cost is more than the NRV of raw material, and second condition is cost of the finished goods should also be more than the NRV of the finished goods. Did you understand? For raw material, only when both the finished goods as well as the raw material price, both as well as the raw material, both of them, the cost is more than the NRV, only then you will value raw material at NRV. All of you clear? Yes. Can we write this down quickly? Write down.
For raw materials, can't it be the cost of replacement?
Raw material?
Can't it be the cost of
No, as per accounting standard, it is this only. Right? It has to be cost or NRV. Cost of replacement means what? Replacement cost is different versus selling price. Both are two different things. Replacement means what? Realizable value and replacement cost are not the same. Replace means what? So for example, I have purchased a computer. Okay. 2 years back, I've purchased it, still in my stock. I'm a trader of computer only. Do you think the cost of replacing will be higher or realizable value will be higher? 2 years old computer, if I have to sell, I'll sell it at a lesser price. Are you understanding?
Yes,
Replacement means what? I have to get a new computer to replace it, correct? So the cost of the replacement will be more than the realizable value. What I'm talking about is the selling price here of my inventory. Did you all understand this difference? So replacement, you do not get confused. Go strictly by the accounting standard. Okay? Yes. Write down. Valuation of inventory. Cost or NRV. Put in the center, write down or, and then on the right hand side, write NRV. Cost on the left hand side, or in center, NRV on the right hand side, and then connect left with right, and then write down whichever is less. Cost or NRV, whichever is less. Clear? Under cost, so bifurcate the page into two. Okay? Two you bifurcate. Left hand side will write all cost related information now. Okay? Under cost, you put downward arrow mark for cost and then write down Roman number 1. Okay? Cost of purchase. Roman number 1 under cost, write down cost of purchase. Okay? includes, write down one by one. Cost of purchase, you underline. Okay, this is a subheading, right? That's why I put Roman number 1. Includes, one by one, write down. Purchase price. Next point. Duties and taxes not recoverable. Duties and taxes not recoverable. Okay. Next. Third point. Freight inwards. Fourth one. Other cost which is directly attributable. Other cost which is directly attributable and incurred to bring the inventory to its present condition and location, or present location and condition. To bring the inventory to its present location and condition. Other cost which is directly attributable to bring the inventory to its present location and condition. Okay. Next, below that, excludes. All this is includes. Okay. Next one, excludes trade discount, rebates, duty drawbacks, trade discount, then next rebate, after that duty drawbacks, the duties and taxes which are recoverable. Duties and taxes which are recoverable, etc. All this is excluded. Done. Next, Roman number 2, cost of conversion. Here write down. Includes, again includes. Under that, write down one by one. Direct material, direct labor / wages, direct material, direct labor / wages, overheads relating to production. Overheads within bracket you can write down indirect cost. Overheads means indirect cost. Okay. Overheads, direct material, then direct labor / wages. Third point is overheads within bracket indirect cost relating to production. Clear?
Yes, sir.
Yes. Next, other than below that, excludes, following are excluded. Okay. And then write down one by one. Finance cost, that is interest and borrowing cost. Finance cost, that is interest and borrowing cost. Okay. Next, number 2, storage cost unless they are necessary. Storage cost unless they are necessary in the production process. Storage cost unless they are necessary in the production process prior to further production stage. Storage cost unless they are necessary in the production process prior to further production stage. Next, administration overheads which do not contribute to bringing the inventory to its present location and condition. Administration overheads which do not contribute to bringing the inventory to its present condition and location, or present location and condition. Clear? Okay. Next point, selling and distribution cost. Selling and distribution cost. Last one, abnormal costs. Last one, abnormal costs. Clear? Here you can highlight in selling and distribution, highlight the letter S. Okay, or circle the letter S if you don't have highlighter. Circle the letter S. Administration overhead, circle A or highlight A. And first point you circle or highlight F, the letter F. SAF. Clear? There you can write down. There only deduct or excludes and the wherever you have written. There you can write down within bracket SAF. Clear? SAF.
Sir, cost of acquisition comes under cost of purchase only, sir.
Yes. Yes, yes. That is cost of purchase. Done. This is my cost. Okay. Now the second part of the page, that is NRV, right? For that, now actually there are 3 arrow marks. Now how do you want to present it? You can, it's up to you whether landscape portrait you do or you do it vertically down, up to you guys. But 3 arrow marks. First one is finished goods. Under NRV, 3 arrow marks. First one is finished goods. You can make it vertical if you cannot, don't have place to make it horizontal. Okay. Vertical, first finished goods, then WIP, and then raw material. Okay. Finished goods. NRV is equals to selling price minus estimated selling expenses. Selling price minus estimated selling expenses. Okay. Next, second arrow mark, WIP. Where you write down below that NRV is equals to selling price minus estimated selling expenses minus cost of conversion. Yes. Now what you can do is, in the first point, finished goods only, selling price minus estimated selling expenses, you put that in a bracket and call it as A. Okay. In WIP, you can write down below this entire full equation, write down or below that write down or, and then write down shortcut equation A minus cost of conversion. Simple. Correct? So if you know, it's nothing but finished goods, but one additional point here is cost of conversion. Clear? Next, third arrow mark, raw material. There NRV is equals to write down NRV for raw material is equals to 2 arrow marks, raw material, sorry, left hand side, normally at cost, right hand side, at NRV when Under that, number one, cost of raw material is greater than NRV of raw material and cost of finished goods is greater than NRV of finished goods. Here, note down, very important. For finished goods, how will you find out the NRV? It will be my selling price. There you will not consider the replacement cost. Clear? Yes. For finished goods, put a hyphen and write down. Selling price as referred above. That is A. Understood? Selling price as referred above, that is A. Okay. For raw material, there in that place, NRV of raw material is there. Only you put an arrow mark and write down. There it will be replacement cost.
Sir,
I repeat, right? Raw material is valued at left hand side normally at cost, correct? Right hand side, first one, right? Sorry, at NRV when first one, cost of raw material is greater than NRV of raw material. Clear? Second one, and cost of finished goods is greater than NRV of finished goods. NRV of finished goods give reference to A. Melgade A bardiralla adike. That will be my normal selling price itself. Their replacement cost. So that is my computer example. Correct? Is computer my raw material? No, I'm trading in it. It is my finished goods or my stock in trade. Did you understand? Yes, that is my computer example. But for raw material, say cloth I've purchased, right? Or any other raw material, there it will be put a hyphen and write cost of raw material is greater than NRV of raw material. For NRV of raw material, only one circle have to right hand side you write down. For that, it will be replacement cost. So at first point, my NRV is my replacement cost. For the second one, NRV of finished goods, it is A itself. Correct? Now you below this you write down NRV for raw material is equals to replacement cost. NRV of raw material is equals to replacement cost. Normally you valued at cost itself. Is this clear to all of you? Normally you will value the raw material at cost itself. Now whether to value it at NRV of raw material or not, you will check two cumulative conditions. First condition is whether the raw material cost is more than the NRV of raw material, that is replacement cost. Clear? Second point you will consider is whether the cost of the finished goods is greater than NRV of finished goods. Here you don't consider it to be replacement cost alla. Illi normal A ne nodbeku. Artha aita? Everybody understood? Anyone has any doubts in this? Yes? Crystal clear? All right. So that is my valuation of inventory. Okay.
Sir,
Yes.
sir, can you explain replacement cost? I didn't understand.
Can I explain? Replacement. Same example. Say I have got a computer, right? Now 2 years later, I'm going to, it is in my, so 2 years better, 2 months it kodana. Okay. Electronic goods and all, 2 months, 3 months also value keeps decreasing, correct? Now there are two items. If I have to sell this goods now, right, the value will be lesser.
Yes, sir.
If I have to replace that good, right, the value will be different. Replacement is not the selling price. At what price can I purchase the raw material to replace my existing raw material? That is my purchase cost. Realizable or selling price is at what price can I sell my existing raw material in the market? Clear?
Yes, sir.
There are two different costs. Replacement and realizable are not the same. Clear? That is my selling price is different, purchase price. Replacement is normally, it means my purchase price. At what price can I purchase to replace my existing inventory?
Sir,
Understood?
for raw materials, it is replacement cost. And for finished, it is selling price now, sir?
For finished goods, yes, it is A. For raw material, it is my replacement cost.
Okay, sir.
right? So Ali, what will happen if I didn't want to give it at the start, NRV is equal to replacement cost, then I didn't want you to apply that replacement cost for finished goods also, Allah. Finished goods, okay, it will be A only. It is just a condition to be checked. Valuation will depend at NRV of raw material itself. I hope this point is clear to all of you. Yes? Okay.
Yes, sir.
Okay, this is my valuation of inventory. Next. Now, whenever you are considering this cost or NRV, if you remember, it is not on a total basis. It's not that you will consider the total of all the raw material, total cost and total NRV and then compare. No, for each line item, it has to be compared. Remember my sari, shirt and pant example. You will not add the cost of all sari, pants and shirts. Yes, you will check for each line item. For sari individually, pant individually and shirt individually. Remember? Yes, that is how you have to compare the cost for NRV, whichever is less. That is one point you have to remember. That's there in the CAPS material note anyway. Okay. All right. Now, what are the methods of valuation? What is the cost formula? That is next topic that we discussed. Yes. What are the methods? First one is historical cost method or my non-historical cost method. There are two broad arrow marks. Okay. Broad categories. First is historical cost method. Another one is non-historical cost method. Let us first understand historical cost method. Right? Under that, again, you have when inventories are interchangeable and when inventories are not interchangeable. Correct? Remember, when inventories are interchangeable, what does it mean? For example, a shirt. Yes, they're produced in mass batches. Correct? And lot of numbers. Each inventory. Now, when you go to a showroom, right? Will it matter if you buy one? There'll be same size shirts kept next to each other. Each of them can be interchanged. It doesn't matter which one you pick, correct? That is my interchangeable inventory. But if you remember my Manish Malhotra designer lehenga for your wedding example, that can you interchange? If you can interchange that, then that means you're Ambani. Only Ambani can interchange it. Nobody else can interchange that lehenga because it is so costly and customized. Yes, your Govinda pants designed by Shetty sir cannot be interchanged. It is one and the only piece. Yes. So when it is not interchangeable, then you go with specific identification method. Yes. When the goods are not interchangeable, you will go with specific identification method. That means what? You'll find out what is the cost of each and everything, trace it to that product individually, specifically for that product. Clear? Otherwise, tracing is not required. We follow methods like FIFO, LIFO, simple average, weighted average price, etc. However, as per AS2, only FIFO and weighted average price is suggested. Yes, this is my historical cost classification. My non-historical method is what? Standard price method. Okay, what is standard price method? Whenever prices fluctuate very frequently, example petrol, etc., then you can go with the standard price method, wherein it is not dependent on the actual price of a purchase price or the market value of the inventory. Clear? You go with the standard price, predetermined price based on some R&D done. That is standard price method. Because it is not dependent on the cost, it is called non-historical cost method. Did you understand? It is called standard price method. And the other one is adjusted selling price method. Remember this? My retail store example, when you do not have cost, breakup, when you are not kept proper track. Remember, that is when you go with adjusted selling price method, wherein you find out what is the closing stock. You have the quantity of the stock. You don't have the valuation of the stock. That time, how do you value the stock? You value the closing stock also at selling price and you minus the gross margin percentage to arrive at the cost value of the stock. Yes, that is my adjusted selling price method. This is the cost formula. Okay, write down methods for valuation / cost formula. Methods of valuation / cost formula. Here, draw two arrow marks. Two arrow marks. Left hand side, write down historical cost method. Left hand side, historical cost method. Under that, again draw two arrow marks. Left hand side. Inventory not interchangeable. Inventory not interchangeable. Below that, write down specific identification method. Specific identification method. Example, SS Govinda pant, etc. SS Govinda pant, Manish Malhotra, designer dress, etc. Yes, that is my specific identification method. Okay. Next, right hand side, inventory interchangeable. Inventory interchangeable. Under this, draw 4 arrow marks. Under this, draw 4 arrow marks. Write down FIFO, FIFO, first arrow mark, FIFO. Second one, LIFO. Third one, SAP, that is simple average price method. SAP. Fourth one, WAP, weighted average price method. Okay, connect FIFO and WAP and write down suggested by AS2. Suggested by AS2. FIFO and WAP is suggested by AS2. Next, under non-historical cost method, draw 2 arrow marks. Right? Left hand side, write down standard cost method. Right? Standard cost method. Below that, write down when there is or when price fluctuates and there are numerous transactions. When price fluctuates and there are numerous transactions. Okay? Example, petrol, crude oil, etc. Example, petrol, crude oil, etc. That is under standard price method. Clear? Next, under adjusted selling price method. Adjusted selling price method. Also called retail inventory method. Also called retail inventory method. Normally used when? Normally used when?
Sir, retail.
Retail inventory method. Normally used when? Individual cost normally used when individual cost of each item of inventory normally used when individual cost of each item of inventory is not easily ascertainable. Is not easily ascertainable. Write down the formula. Closing stock value is equals to closing stock value is equals to closing stock at selling price. Closing stock at selling price less gross margin. Less gross margin. Less gross margin. All of you done? Yes. And then we had, we learned about physical verification, where there is forward method, backward method. That I just discussed that in brief. Okay. And then we'll go through the notes. So if you remember that if the physical verification of the stock, yes, Pratiksha, if it is not done as on the date of the closure of the books, say that is 31st of March, right? So ideally what should happen when you close the book that day itself, at the end of the business hours, you should take down the stock and keep it with you. If that happens and nothing like it, then there is no issue at all. Yes, but practically it is not possible. Sometimes you take it earlier, sometimes you take it later, right? If you have taken it earlier, say on the 25th of March, then what do we have to do? Physical stock is taken on 25th of March, correct, Vailakshmi? We are supposed to arrive at the stock as on 31st of March. So what will we do? To the stock that is taken on 31st of March, we will add all the purchases, correct? Because all the purchases is coming and sitting in my stock. So all the purchases done between 25th of March to 31st of March will be added. Is this clear to all of you? Yes, all the sales done during that period will be subtracted. But sales will be subtracted not at selling price, but at cost. That means COGS, that is your cost of goods sold, will be subtracted. All of you understood? Same treatment, similar treatment you have to give for purchase return and sales return also. So the purchases you take net purchases, sales you take net sales. That is after minusing for or adjusting for the purchase return and sales return. Clear? So now first you always think of forward, moving forward. It's easier, correct? So backward andre, if I'm coming back from 5th April to 31st March or 10th April to 31st March, you do the reverse. In forward, purchases were added, correct? Yes or no? You're adding the purchases because it is coming and sitting in my stock. Now, when you're coming back, you will add or subtract. You will subtract. COGS you had subtracted. Now you will add. Understood? Yes, this simple thing, that's all. If you know this, then you can easily answer. Clear, all of you?
So, but when we need to arrive at the last date, we need to add purchases and minus sales, no sir? We can't come
Then
backward, no sir?
forward or backward?
Forward.
Forward, I told, no, yes, you're adding purchases and subtracting COGS.
Okay, sir.
Backward only, you will do the reverse.
Minus purchases, add sales.
Add the COGS. Yes. Clear? Yes. All of you understood?
Yes, sir.
Yes.
All right. That's it. Okay. This is my theory of inventory. Clear, all of you? Next, shall we quickly go through the theory of sale and approval also and then solve both the problems? Yes. Sale and approval is a very small chapter. It will not take a lot of time. Quickly go through that theory also and then both the problems will solve together. Clear? All right. So, what do I mean by sale on approval or return basis? Yes. This, don't give me the definition, but let me see how many of you can recall the concept at least. What is the example I've given you guys during the classes?
Myntra online apps.
All the Myntra apps, right? What does it mean? Sale on approval or return basis. That means that the sale has not yet happened. It is conditional on your acceptance or the customer's acceptance of the goods. Correct? Goods are sent, but it is treated as a sale only when you accept the goods. Is that clear? Or time period has lapsed. Yes, when you're buying Myntra, what does it say? You can return the goods within 1 week, within 10 days, within 15 days, correct? So once the 15 days period expires, even if there is no intimation from you as a customer, it will be treated as a sale. Remember this? Yes. Correct? So all of this confusion happens when? Only during the year end. During the year, nothing will happen. But year end, as on 31st of March, if no intimation is received from the customer and if the time period has not lapsed, then how do we treat this sale in the books of account? That is what is the entire discussion in this chapter. Correct? Remember this? All right. For that, I think I will quickly screen share it only and then discuss from the chart itself. One beautiful chart I had done. That is discussed from the chart. Open your caps material. Yeah, what is the page number of sale on approval?
25.
25. Yes. Page number 25. Sale on approval or return basis. Yes, I'll only read this. Okay. You can underline whatever I highlight. It is a process of sending goods to prospective customers, time given test and approval of goods, correct? So you are giving them time to test the goods and then approve it. Okay. It is mainly meant for sale of consumer durable like TV, electronic items, etc. Okay. Sales recorded on accrual or expiry of the period, whichever is approval, or that is accrual means what? That is when they accept the goods, or expiry of the period, whichever is earlier. Okay. Here accrual means what? Basically acceptance of the goods. Sales at sale value, closing stock will be obviously valued at cost. Stock with customers to be included in seller's closing stock. Yes, if the acceptance is not yet received, you will include it in your closing stock. Methods of accounting for sale on accrual return basis when goods are normally sent. So all of this, I think we'll go through the chart and then we'll go through this. Okay, this is the basic theory. Okay, now come directly straight away come to the chart. Sale on approval or return basis, there are three kinds. One is it is when it is casual or occasional or few in nature. Remember? Yes. When the number of transactions is very few, then the treatment is different. When it is on a frequent basis, that time the treatment is different. When it is on numerous basis, again the treatment is different. Okay. Now, when it is casual, occasional, or few, then what do we do? When the goods are sent to the customer, it is treated as a sale itself. Clear? Right? Accounting wise, because it's very few in nature, right? What do? We treat it as a normal sale itself, and the entry to be passed is customer account debit to sales account. All of you understood this? Yes. Next, when it is approved, since earlier already sale transaction is recorded, when it is approved, do you need any entry?
No, sir.
Obviously, no entry required because you have already recorded the sale. Next, when it is returned or rejected, or because you have earlier recorded the sale, now you reverse the transaction, sales account debit to customer account. Is this understood?
Sir, but first entry, it is a credit sale, no, sir. When it is approved, when we get cash entry only that will be recorded, no, sir.
That is not sale entry, no. Receipt entry is different, no. You are only talking about sale entry. Okay. That is a normal thing. Today, say not sale on approval. Normal sale I do to you, Tejaswini. Then tomorrow, if you give me the cash, I will record that cash. Correct? These are not connected. These two are not connected. Clear?
Yes, sir. Only we'll concern about the sale, not the.
Yeah, I'm only talking about the sale transaction. Okay. Receipt entry is normal. That you will cash is coming, it has to be recorded. Cash is given, it has to be recorded. Simple. Yes. So when it is approved, no entry is passed. When it is returned or rejected, then what is the entry you pass? You reverse the transaction, that is sales account debit to customer account. Third one is the most important, market important. When there is no intimation received, and very important, time also has not expired as at the reporting date, then what is the entry we pass? We have to reverse the sale transaction because as on 31st March, for my financial statement purposes, is it an actual sale if the approval is not yet received?
No.
Just tell me, it is not a sale. So you reverse the sale transaction, and it is my stock which is lying with the customer, correct? It is the stock which is lying with the customer. So you recognize the stock separately as a separate line item. In the stock, you'll have two line items. One will be your normal stock, and second one will be stock lying with customers on approval basis. That we call it as what? ICSR account. Remember this? Yes, all of you. Inventory with customer on sale or return basis. That is my ICSR account. That I value it at cost, debited to trading account. Here, in your trading account, you write by closing stock, right? So you write here by, that is why ICSR account debit to trading account. All of you understood this entry?
Yes, sir.
Yes, sir.
Yes. Next. when approval happens, there are three possibilities. One is it may be approved at the same price as it was when when it was given or when it was recorded earlier. If it is approved at the same price, then no entry is required. Yeah. Yes. However, if it is approved at a higher price, then the differential should be recorded as sale now. So customer account debit to sales, only the differential of 20 rupees is recorded. Can you see? Yes. When it is approved at a lesser price, then the differential will be reversed. Sales account debit to customer account. All of you are understanding? Yes? Okay. Next. Under no intimation case, subsequent to the period. What do I mean by subsequent? That is after the reporting date, when it is subsequently approved. Since you had reversed the sale transaction earlier, you will record the sale transaction when it is approved. That is customer account debit to sales account. Did everybody understand this? Yes. Since and when it is subsequently returned or rejected, no entry is required because on 31st March itself the sale was reversed. Yeah. Yes. However, this thing returned and rejected when the goods come and sit in my stock, I'll have to move it from my stock lying with customer to my warehouse. Stock. That is in my store ledger or whatever inventory books I'm maintaining. There I need to show the inventory. That is the only change. But in my journal entries, there is no entry required. Have you understood this? Yes. Next, when it is on frequent basis, that time sale and approval journal is maintained with 4 columns. First one is total value of goods sent on approval. Second is goods returned. Third is goods approved, and last is balance lying with customer, which is the difference between total value of goods sent minus goods returned minus goods approved. Yes, this journal is maintained, on which we have certain problems also, which will be going. Next, the entry is to be passed. When goods is sent, obviously no sales entry required. Yes, because it's not a sale, right? Only because on casual or few basis, only when the goods are sent, you record. In no other method, you will be recording the sale. When it is approved, you will record it by passing the entry customer account debit to sales account. And when no intimation is received, you will pass ICSR account debit to trading account to recognize the stock line with the customer. Is this clear? Yes. Sale return entry is not required. Yes.
Can you tell the full form of ICSR, sir, again?
ICSR?
Yes, sir.
It's written in the chart also, but I will again reiterate. It is inventory with customers on sale or return basis. Okay, in the chart down, I think some abbreviation will be given. Is it given?
Yes, sir.
Yes, sir.
ICSR is inventory with customer on sale or return basis, and GSO, that is goods sent on approval. Okay.
Sir, is it same as stock lying with customers?
That only. It is stock line with customer.
Okay, sir.
Okay. Yes. But what customer? I am specifically saying it is goods sent on approval or return basis on the customer. So yes. Next. When it is numerous in nature, then you prepare memorandum books are maintained. What is memorandum books? It is not a part of my main books of account. Are you understanding? Yes. For the two memorandum books, one is sale or return day book, and second one is sale or return ledger. Right? Here, when the goods are sent, no entry in the books of account. But in the memorandum books, you have to record that is customer account debit to goods sent on approval account. Here. Instead of sales account, you will record it as goods sent on approval account. Next, when it is approved in the books, obviously you have to record the sale transaction, yes or no? Correct? So customer account debit to sales account is recorded in the books of account. In memorandum books, you no longer need to trace this transaction, correct? Because it is approved and it is gone, it should move out of my memorandum books because it is entering my books of account. So you will reverse the transaction, goods sale on account debit to goods sent on approval account debit to customer account. Do you understand this transaction? All of you? Yes. Next one, when it is returned or rejected in the books of account, no entry because earlier sale also have not entered, correct? When sale is not recorded, why do you have to record the other transactions. So here also, when it is returned, it is not recorded. In memorandum books, you need to reverse. So again, goods sent on approval account debit to customer account. And when no intimation is received, you need to record only the inventory. So inventory lying with customer account debit to trading account. And in memorandum books, no entry is required because that balance has to continue with goods sent on approval account. Have you understood this?
Yes, sir.
Now, quickly, I'll just go through the first page. It will be easier for you guys to understand. Right. See, methods of accounting for sale on approval return basis. When goods are sent occasionally, then normal sales. Yes, all of you understood. When goods are sent frequently, sale or return journal is maintained with 4 columns. I told you already discussed. When goods are sent numerously, 2 memorandum books are maintained. Next, when goods are sent on 10th March 2017 with 1 month period given, no entry when goods are sent, sale entry on approval or expiry on 31st March record as closing stock if not yet approved, whichever is earlier. Next, return entries. After expiry of the period, sales return entries since the sale entry was already passed. Within the period, then technically no entry since the entry was passed when the goods were sent. Did you understand this? All of you? Yes. When valuing the inventory, stock lying with prospective customers should be added to closing stock. Yeah. Yes. All right. Open your RTP.
Sir,
Yes.
how to identify whether it is the goods are sent in like casual basis or frequently or numerous?
How do we identify it? If you're asking from an examination perspective, they would have given the question. Okay.
Okay, sir.
Practically, you will know. Right? Occasionally or frequent, when it is sent occasionally means maybe a few times in a year you are doing it. Then it will become occasional. Frequently means every month the transaction is there, sometimes 15 times each month you are doing. That is frequent in nature. Numerous means I am talking about not just frequency is the time gap, right? Frequency is the time gap. Numerous is the quantum that is involved. So the two different things. Okay. When it is numerous in nature, then it makes sense to prepare memorandum notes. Okay. All right. Open your RTP. Question number 10. Question 10. In your found this thing, revision material, what is the page number?
213.
113. Yes. 113 of your revision material. All of you quickly open. Question number 10. Is one of you read the problem?
Anupam supplied goods on
Continue.
Anupam supplied goods on sale or return basis to customers. Particulars of which are as under. Date of dispatch 10th December 2022. Messrs. PQR Company 3000. No information till 31st December 12th December 22. Messrs.
Is it audible? I think it is. Rashita, ಕೇಳಿಸ್ತಾ ಇದೆಯಾ? It is audible to all of you?
No, sir.
Oh, okay. Then can somebody else read? Sorry, I think there's some network issue.
12/12/2022, Mrs. XYZ Co. 25,000 returned on 16/12/2022. 15/12/2022, Mrs. measures STV Co. 22,000, goods worth rupees 12,000, 2012 to 2022. 2012 2022, Mrs. XYZ Co. 26,000, goods retained on 24/12/2022. 25/12/2022, Mrs. PQR Co. 21,000, goods retained on 28/12/2022. 30/12/2022, Mrs. STV Co. 23,000, no information till 31st December 2022. Goods are to be retained within 15 days from the dispatch, failing which it will be treated as sales. The books of Anupam are closed on 31st December 2022. Prepare the following account in the books of Anupam. Goods on sale or return sold by written day books. Goods on sales or return total account.
Okay, simple. You're supposed to prepare the day book and then prepare sale or return total account. So you do it. Okay. Yes. Open a notebook, write down question number 10, RTP, June 23. Sale on approval or return basis. Question number 10 of your RTP, June 23 examination. Okay. Now, in the books of Anupam, in the books of Anupam, you will write down exact what is the question, what are they given? It is goods on sales or return, comma, sold and return day book. Goods on sales or return, comma, sold and returned day books. Yeah. Yes. Now draw columns. 7 columns will be there. Okay, first column will be date. First column date. Second column party. Party. Then ledger folio. 7 columns. First one is date. Second column party name you have to write. Then third column ledger folio. Amount in rupees. Amount in rupees. Again date column. This date is with respect to date of acceptance, date of return, etc. First date is the date of the transaction. Second column, now what you are writing, that is the date of. Just write down date, but I'm telling you what that column represents. Okay, date. Then after that, sales and then return. Sales and return 2 columns. I repeat all the columns. First one is date. Okay. Second one is party name. Ledger folio. Okay. After that, amount column. Okay. Then again date. Then sales and then return. Yeah. Then sales and then return. Yes. Now come to the question. First one, date. That is 10th December 2022. 10th December 2020. 12/22. Party name is
Message.
PQR Co. This is PQR and Co. Just write down exactly. This is PQR Co. Just folio, keep it blank. Amount. How much is it?
20,000.
20,000. Amount 20,000. You just write down the question first quickly. Okay. Oh, no, wait. We'll finish it off. What are the remarks given? No information till 31st December 2022. No intimation is received. What do we do? Please tell me.
Stop lying with customers.
So it will come in the sales column or return column?
Sales column.
Sales column.
Stop lying with customer. How will it come in sales column? Why is it coming in sales column? No intimation is
Because
received.
there's
15 days credit.
no
15
information
days
is
credit
given.
period. Two conditions have to be. Both the conditions should be unsatisfied. Yes or no? to treat it as what? As goods lying with customer. First condition is no intimation should be received. Second condition is the time period should not have lapsed. Here, what is the time period given? Check the question. Goods are to be returned within 15 days from the date of dispatch. Yes, 15 days from 10th December is 25th December. If no intimation is received as on 31st December, then can I treat it as a sale as on 25th December? Yes or no?
Yes, sir.
Yes, sir.
Yes,
Yes, sir.
write down the date column will write down 25th December / 22, 25th December 22. Amount is in the sales column rupees 20,000. The sales column rupees 20,000. All of you got it? Next is date of dispatch, that is 10th December 22. This is XYZ company. This is XYZ Co. I am looking at the question. Okay. Just look at the question easily and just write down everything. Amount is 25,000. Done. So given that returned on 16 December 22. So you don't have to apply your brains. Write down the date as 16 December and in the return column, write down 25,000. Easy. Yes, your problem. Wow. They give the information so simple, sir. Either ella kodbekalva or they should give everything, then why should we? Let us just write whatever they will. It will be so easy then. Okay, next one. 15th December 22. 15th December 22. This is STV Co. STV and Company. Okay. This is STV and Company. Keep the question shared. It will be easy for all of them. Yes. Yeah. 15 December, Mrs. STV and Company, 22,000. Goods rupees 12,000 returned on 20th December 22. That means what? Partially accepted as a sale. Balance was returned. So in the date column, what will you write?
30th.
Date column. 20th itself, correct? Write down the date column, 20th December 22.
Sales column 10,000.
Sales column
10,000.
10,000.
returns column, write down 12,000.
12,000.
Okay. Next, 20th December 22. This is XYZ company. 26,000 in the amount column. Date column, write down certain goods retained. What does it mean?
Inventory
With the customer.
lying with customer.
Goods retained means what? It says goods is retained by whom? It is retained by the customer.
Customer.
Understood? Goods is retained by the customer on 24th December 22. Therefore, it is approved. So it's a sale transaction. In the sales column, write down rupees 26,000. Sales column, write down 26,000. Yeah. Next. Again, date of dispatch 25th December 22. Party's name PQR and Company. Amount 21,000. Just quickly write down. 25th December 22. Mrs. PQR and Company. PQR Co. 21,000. Date column 28th December 22. Is in the sales column, write down 21,000 because it is retained. Retained. Right? What have you done till here? Last one. Date of dispatch is
What should we write in date column, sir?
there only, same date, 28 December 22. First date column will be date of dispatch. Second date column is the date of return or date of sale. One of the dates. Okay.
Okay, sir.
28 December 22. Next one. 30th December 22. 30th December 22. Again, Mrs. STV Company. Amount 23,000. Amount 23,000. Here. Look at the remarks. It says no information till 31st December.
Sales.
Is it a sale?
Yes, sir.
Is it a sale?
No,
No, because time period is not lapsed, correct? 30th December means time period is there till April. Yes, 16 days. So time period is not lapsed, so it is not a sale transaction. It is neither a return, so both will be blank. Sales column, date and return column, all the three will be blank. All of you done?
Yes.
Now, total
Sir, amount is 1,30,000.
amount column, first amount column, what is the total?
1,37,000, sir.
1,37,000. Others, please confirm.
Yes,
Yes.
sir.
Yes.
Yes, sir.
Next column, what is the total?
Sales account is 77,000.
That's it. Everyone getting the same answer?
Yes, sir.
Yes.
And return
77,000.
is 37,000.
Return is 37,000. Return is 37,000. All of you got it? So the first part of the answer is done. That is, we have prepared the day book. Next, let us prepare the ledger.
Sir,
Yes.
sir, could you please explain the reason once again why it's neither a sale nor a return?
See, when is the date of the dispatch? That is date of transaction is 30th December, Anjali. Okay. So 30th of December, the goods is sent to the customer worth rupees 23,000. Okay. Now, as on 31st December, remark given is we have not received any information from them. Okay. What does it mean? So if you go to the chart, when no intimation is received from the customer and when the time period is not lapsed, then what will I treat it as? I read as inventory lying with the customer. Correct? It is neither a sale nor a return. Correct? It will be treated as a sale when they approve the goods. Understood, Anjali?
Yes, sir. Is it because it's only one day after the date of sale?
Yes, correct. 15 days is not expired. We are recording everything as on 31st March. As on 31st of December, no?
Yes, sir.
As on 31st December, we are prepared. That's it. Yeah.
Yes, sir.
Yes. And the assumption is it is on frequent basis. One more thing is it is on frequent basis, because if it is not on frequent basis, then it is recorded as a sale when the goods are sent itself. I hope everybody understood. Day book when we are prepared when it is on frequent basis. Remember, all of you. It is also important. Okay. Assumption is that this is on frequent basis. You can get to know because there are so many transactions happening in 1 month itself. So obviously it is on frequent basis. Plus they've told you to prepare a day book for this and prepare a total account, which normally happens on frequent when you are going with second amount. Yeah. Is Vaira Lakshmi? Doubt? Yeah. Okay.
So
Yes,
what's the
retail
difference for
customers. Yes.
goods retained and no information till date?
Sorry. Who is this? Grishma, is it?
Yes, sir.
Yes,
What's the
Grishma.
difference between that goods retained and no information till date?
See, no information means what? So, Grishma, I have sent you some goods. Okay. You have not told me whether you have accepted or rejected the goods. Okay. That means no information. Is that clear?
Okay, sir.
Yes. Next, retained means what you're telling me. That means indirectly you've given me saying that you have approved and you're retaining the goods with you. Right? You have liked the goods and you're retaining it with you. Right? I am the seller, you are the buyer. You have liked it and you have retained it with you means you have accepted the goods.
Okay, sir.
Understood? Yes. Grishma, understood or not?
Yeah, sir.
Yes. Okay. Thank you. Any other doubts? Can we prepare the next one? Next account? Yes. Write down the heading. Goods on sales or return total account. Goods on sales or return total account. Date particular amount, date particular amount. Ledger account. Good. Goods on sales or return total account. Date particular amount, date particular amount. Yes. Okay. Next. What will we do? First one, remember. Right? So we are not actually treating them as sales, correct? So what will we do? We'll take the we are not since it is taking, we are taking all these transactions from the day book. If you remember, day book is what? We can take the totals directly. Do you have to pass each and every ledger? Ledger entry not required. Okay, so that is why total we will take. Okay, now sales means you have to credit sales. Yes. So two sales it will come, right? So write down here the date column. Write down 31st December 22. The date column on the debit side. Write down 31st December 22. And credit side also the same 31st December 22. Credit side we will write what? By goods sent on sales or return. By goods sent on sales or return. On the amount column, write down the total of the amount, that is 1,37,000 rupees. 1,37,000. Total also write down 1,37,000.
Yes, sir.
Yes. So now this you write down. On the debit side, write down sales. So credit side is done. Yes. Debit side you write down 2 sales. Yes, 77,000. Sales rupees 77,000. Next, returns.
37,000.
Yes, 37,000. And then to balance carried down rupees
23,000.
23,000. What does this 23,000 represent? It represents inventory lying with customer. Whatever is the inventory lying with customer, that is what you will carry forward down. Yeah. So amount always reflecting in the balance amount in goods on sale or return total account is always the balance which is lying with the customer. Is this understood?
Sir,
Yes, sir.
sales return as debit, no, sir.
So this is not that this is not that. Okay. Here what we are see here basically, I will do one thing. In class notes I think that time will be okay. I will do one thing. There are other problems. We will go through them. Okay. At that time, I will show you. If you remember, I split it as customer accounts A, B, C, D. Customers P, Q, R, S. So what it represents is actually the customer names. I will show it to you. Don't worry. Okay. We'll go through this. If it is not there in any of the problems, then I'll open the class notes and I'll open it and show you. Yeah. That time only you'll recall it. So now, just write down. So sales and balance carried down, you understood. Only returns you want clarification. Correct, Tejaswini?
Yes, sir.
Don't worry, I'll give it. Okay. Now, 1,37,000, then 37, 77,000 and 23,000, 1,37,000. Have you done with this legend?
Yes, sir.
Yes, sir.
Yes, sir.
Yes. Alright. Now come to your revision material and go to the problem section of sale on return or approval basis. Sale on approval return basis. So what is the page number?
247.
Yeah, 240. 88, something like that should be. 88, 89.
88.
88. Okay. Yes, I'll just quickly go through the problem. A firm sends goods on sale or return basis. Customers have the choice of returning the goods within a month. Always remember, period is important in sale or return basis. During May 2018, the following are the details of the goods sent. Right? So during May, it was sent on 2nd, 8th, 12th, 18th, 20th, and 27th. Customers that P, B, Q, D, E, and R value is given. Within the stipulated time, P and Q return the goods. Therefore, P's goods were returned, Q's goods were returned. Next, B, D, and E signified that they have accepted the goods. So B, D, and E signified that they have accepted the goods. Show in the books of the firm the sale or return account and customer Q for sale or return account as on 15th June 2019. So now this is a continuation. Okay. Hopefully you'll get some clarity. Sale or return account. This is not my normal sales account. It is just an intermediary account. So the transactions are recorded. Yes. It is not actually sales or returns. Okay, na? So now look at this now. Instead of recording what? Say P. Okay. Whenever goods are sent, what is the entry I need to pass? Here, sale or return account will be credited and customer P has to be debited. Correct?
Yes, sir.
When goods are sent to P, what will I do? P account has to be debited and sale or return account has to be credited. Is this understood, everybody?
Yes, sir.
Yes, sir.
It is not a sale. It is not yet a sale. Only when it is approved, it is considered as sale and normal sale entry will be passed at that time. It is only for the purpose of maintaining the day book. So what is the entry I will pass? P account debit. Please understand. Okay. P account debit 17,000. Sale or return account credit 17,000. Clear? Same way I'll do for all of them. P account debit, Q account, D account, E account, and R account. Yes. Now instead of individually taking this, the day book I have individual. So can I take the total here directly, add all of it, 17,000, 22,000, 25,000, 5,500, 2,000, and 28,000. Can I do that?
Yes, sir.
I've added all of it and individual account debit ಮಾಡಬಾರದು. What I do by sundries, that is goods sent on sale or return basis. Debit. Okay. Credit sale or return account 99,500. Is this understood? Next. Right. When the sale happens, at that time, I need to reverse that entry, correct? Therefore, two sundries, that is sales, 29,500, two sundries, that is return, 42,000. It is only for the purpose of nullifying this account. The actual sale and return entry will be different. If you have not recorded the sale earlier, you need to record it now, separately. It is the nullifying entry only. Clear? So that is why what you pass, right? So again, when sale happens, right? B and which is that? B, D, and E, correct? 22,000, 5,500, and 2,000. When you add all of these three, it becomes 29,500 to sundries sales, to sundries return. This is actually B, D, and E. So only for your understanding, in the books you can mention here sundries andre put 5 or how many ever arrow marks and then write down P, B, Q, D, E, R. Idella add money. P plus B plus Q plus D plus E plus R. Then you get 99,500. Yeah.
Yes, sir.
Yes. Next, 29,500 is what? B plus D plus E. Right here. B plus D plus E. Returned is what? P plus Q. So instead of individually debiting and crediting the respective ledgers, we are writing by sundries and step. Because it is there as a part of my day book. Balance carried down is what? R. Balance carried down is R. Yeah?
Yes, sir.
See, now you will understand. When I prepare Q's account, can you see this? Debit and credit, same ledger? Yes. So, in Q, you have written here B plus whatever, P plus Q, right? That Q, only in the Q connected to this. So, here you have written Q or not, all of you, on the credit side. I told you to write plus, right? There,
Yes,
that Q you connected to 25,000 here. So, this 25,000 is included in this 99,500. Yeah. Next up. Here you wrote P plus Q, correct? P 17 and then Q 25,000. That Q you connect it to this 25,000. I hope now your doubt is clarified, Tejaswini.
Yes, sir. Now I got it, sir.
Yes. All of you understood now how it works?
Sir, now here this is just an intermediary account and not sales account or return account.
No, it is not. It is not.
Okay, sir.
Yes. These sundries are nothing but actually Q account. Okay.
Yes, sir.
The RTP November 22, Mr. Jai sends out goods on approval to few customers and includes the same in sales account on 31st March 22. The trade receivables balance stood at 1,50,000, which included 13,000 goods sent on approval against which no intimation was received during the year. Is this right? Should it include on 31st March, if no intimation is received, should it be considered as sale? Yes or no?
Yes, sir.
Yes, sir.
Will it be sales or not sales?
Sales.
It will not be sales, sir.
It will not be sales, correct? Whichever method you follow on 31st March, you will not consider it as sales, correct? You have to reverse it, remember.
Yes,
Even
sir.
if it is on few or occasional basis, if you remember my chart, as on the reporting date, if no intimation is received, the sale has to be reversed. Clear?
Yes, sir. It is stock lying with customers.
So, what does it say? A few customers include the sales account in the sales account on 31st March. The trade receivable balance stood at 1,50,000, which included 13,000 goods sent on approval, against which no intimation was received during the year. These goods were sent out at 30% over and above cost price and were sent to Mr. Narayan 7,800, Mr. Ram rupees 5,200. Okay. Mr. Narayan sent intimation of acceptance on 25th April 22 and Mr. Ram returned the goods on 15th April 22. So the best example is my chart. If you remember my chart, it says if there is no intimation, what is the treatment? Subsequent acceptance, subsequent return, what is the treatment to be given? Yes, let us see that practically now. Take the adjustment entries and show how these items will appear in the balance sheet as on 31st March 22. So also the entries to be made during April 22. Value of closing inventories as on 31st March 22 was rupees 1 lakh. I see now? Yes. So first one is sales only 13,000 is included. Yes or no? Correct?
Yes.
Sales only 13,000 is included. Should it be reversed? Yes, it should be reversed. So therefore, you pass a reversal entry. You can check my chart also. When there is no intimation, in case of occasional or few basis, first is you reverse the sales transaction. Sales account debit to trade receivables account. It is 13,000 and 13,000. Clear? The inventories lying with customer obviously will be at cost. So 13,000 it is sent at 30% over and above. Right? Over and above the cost price. So there you can check the working here. It is 130 divided by 113,000 divided by 130 into 100 is 10,000. This is my cost. All of you understood how the cost is arrived. So that cost you will debit ICSR account, inventories with customer on sale or return account, debit 10,000 to trading account 10,000. Yeah. This is the first transaction. Next. On. What is that? Here. Mr. Narayan sent intimation of acceptance on 25th April 2022. Should this be recorded? Yes or no?
It should be recorded, sir.
It should be recorded because you have already reversed the transaction. So on 25th April, you will pass the entry, trade receivables account debit to sales account 7,800. Okay. Next, Mr. Ram returned on 15th April. What is the entry to be passed?
Reverse the entry.
Yes, tell me. Mr. Ram returned the goods on 15th April. What is the entry?
No.
No entry. Yes. Already you have reversed on 31st March. So obviously now no entry is required. Is this clear to all?
Yes.
Everyone understood? Yes. That's it. And then they've asked you what is the presentation in the balance sheet. So that 1,50,000 in there, you will minus 13,000 and show 1,37,000 as the trade receivables. Inventories, the value was 1 lakh. They've given in the question. To that, you will add ICSR 10,000 and it will be 1,10,000. So total of the assets will be 2,47,000. But this is not required to total actually. Okay. It is not suggested to total. I don't know why it is total. Extracts only, please don't total. Okay. Because trade receivables and inventories are two different line items. It is suggested not to total it. Yeah. Yes. Next one. The goods are to be returned within 15 days from the date of dispatch, failing which it will be treated as sales. The books of X are closed on 31st December 2019. Prepare the following account. Same thing. Can you guys go through this? Similar problem we solved just now? Yes. Exact same problem it is. Okay. That's it. This is my sale on approval or return. Yeah. Perfect. Yes. Take a quick 5-minute break because we don't have a lot. 10 minutes I don't think is required because it's not that I'll be stretching till a lot of time, and then anyway there'll be small gap and then set okay. Take 5 minutes break. 8 o'clock. Notice 8:1, 8:06 we will meet. 8:06.
Yes, sir.
Yes, everyone, come back. Yes, quick. Come on. Also back. Switch on your cameras. Back and then Nando Sumanta. It means you have to switch on your cameras. Krishna, where are you? Yes. First. Right. Open your RTP problem section. I think page 212 or something of your revision material. Inventory, question 6. Inventory, question 6. It's fast. Jana, video of today. Want to read the problem?
Raj Limited.
Continue.
Raj Limited prepared their accounts financial year ended on 31st March 2022. Due to unavoidable circumstances, actual stock has been taken on 10th April 2022. When it was ascertained at rupees 5 lakh, it has been found that first one, sales are entered in the sales book on the day of dispatch and written inwards in the inwards book on the day goods reserved back. Second one, purchases are entered in the purchase book on the day the invoices are received. Third one, sales between 1st April 2022 and to 9th April 2022 amounting rupees 80,000 as per sales day book. Fourth one, free samples for business promotion issued during 1st April 2022 to 9th April 2022 amounting rupees 16,000 at cost. Fifth one, purchases during 1st April 2022 to 9th April 2022 amounting to rupees 40,000, but goods amount to rupees 8,000 are not received till date of stock taking. Sixth one, invoices for goods purchased amounting to rupees 80,000 were entered on 28 March 2022, but the goods were not included in stock. Rate of gross profit is 25% on cost. Ascertain the value of stock as on 31st March 2022.
Okay, let us do it. Yes. Now, here for the different transaction. First one is 5 lakh is the value of the stock. Right? This now, are we going forward or coming backward?
Coming backward.
Coming back.
So purchases, will you add or minus?
Subtract.
You have to subtract. Sales, that is the COGS, you will add or minus?
Add.
Clear, all of you? This much you know means you can easily do do it. Remember, but it is not the sale, it is the COGS. Have they given the gross profit margin percentage? They've given. Rate of gross profit is 25% on cost. 1/4 on cost is how many? What percentage on sales?
1/5.
25% on cost is 20% on sales. That much you know, you can easily solve this problem. Yes, write down. Statement of valuation of physical stock. Statement of valuation of physical stock. Written ascertain the value of stock. As on 31st March 2022. As on 31st March 2022. Particulars and then amount in rupees, 2 rupees column. Particulars, amount in rupees, amount in rupees. 3 columns. Particulars reasonably big. Then amount in rupees and amount in rupees.
So what are the columns, sir? Could you repeat?
Particulars, amount in rupees, amount in rupees. 3 columns. First column particulars, then amount in rupees, amount in rupees. Yeah. Yes. Write down value of the stock as on 10th April 22. Given in the question, or if you keep the question next to you, right? 10th April 22, value is ascertained at rupees 5 lakh, correct? Write down 5 lakh. Next, add. First, we will obviously add cost of goods sold. Cost of goods sold during 1st April 22 to 9th April 22. Given in the question again. See this point? Third point, sales between 1st April 22 to 9th April 22. Write down cost of goods sold during 1st April 22 to 9th April 22. Okay? You that write down. Okay. Sales made during the period at selling price. Sales made during the period at selling price. In the first amount column, write down rupees 80,000. Rupees 80,000. Next, below that, less. Same, it add a lay. First, you have written COGS, right? Under COGS, you have written sales. Sales in the now you have to less what? Gross profit at 20% on sales.
20.
Yes, gross profit at 20% on sales. 20% of 80,000 is how much? 16,000. 80,000 minus 16,000. In the outer column, now write down rupees 64,000. Okay. Outer column rupees 64,000. Everyone understood this?
Sir,
Next
once again
one.
repeat, sir, this one.
Yes. Value of stock as on 10th April 22 is 5 lakh. Okay. Add cost of sale during the period, whatever that 1st April 22 to 9th April 22. Okay.
Yes, sir.
Next. Below that, I told now COGS you have to find out. Correct. Cost of goods sold during the period 1st April to 9th April. Now, how do we find out? Below that, I told right sales during the period at selling price is 80,000 in the inner column. Okay. Yes. Sales at selling price during the period at 80,000. Yes. Gross profit at 20% on sales 16,000. The inner column we write 16. Then in the outer column we write 64,000. Clear? Yes. Next, below that, if you see, point 4 is free samples. Free sample is also like my sales only, correct? It is like sales, and here no calculation required because they're given at cost only. So this 16,000 at cost, you write in the outer column directly. So below that, free sample, outer column write down 16,000. Now can we add it? 5 lakh plus 64,000 plus 16,000.
5,80,000.
Let's write down rupees 5,80,000. Rupees 5,80,000. Okay. Next.
Sir, how did we know that the gross profit
Gross profit.
is 20%?
Here, question only. Okay. Last line. You see this? Rate of gross profit is 25% on cost. 1/4 on cost is 1/5 on sales. 25% on cost is 20% on sales. Clear?
Yes, sir.
Yes. Next. Below this 5,80,000 write down less. Purchases received. Very important. It is not just any purchases received during 1st April to 9th April 22. Purchases received during 1st April to 9th April. Okay. Below that,
32,000.
purchases made. You have to show the working. Purchases made. Write down in the inner column 40,000. Correct. Purchases made. The inner
Yes.
column 40,000 less goods not received as on 9th April? 8,000. 40,000 minus 8,000. Outer column, write down minus 32,000. Correct? This you have to subtract. Minus 32,000. Therefore, now write down 5,80,000 minus 32,000. Outer column
5,48,000.
5,48,000. Yeah. Next. Then what they've written down is, see, sixth point, check the sixth point, important, mark that as important. Invoices for goods purchased amounting to rupees 80,000 were entered on 28th March 22, but the goods were not included in the stock. That means what? That this was not considered in the stock at all. You understand? See, I repeat. These purchases were made before 31st March. Clear? Yes, but it was not included in my stock. That means it is not included in 5 lakh also.
So we need to add.
So now you need to add it. Clear? So therefore, as a separate line item, now write down add purchases made during March 22, but not included in the stock. But not included in the stock. Below that, write down add purchases made during March 2022, but not included in stock. 80,000. Therefore, last one, final answer is value of the physical stock as on 31st 22.
6,28,000.
6,28,000. 6,28,000. Everyone understood this problem?
Yes.
The only thing is the last adjustment you have to take care of that. There is a little special adjustment. Everything is simple. Like I told you, net purchases and net sales only is taken. That's all. Clear all of you?
Yes, sir. Sir, can you tell me the percentage of sales and cost? 25% and 20%. If you're going backwards, so it is 25, sir.
One
Suman,
second.
sir.
Suman, tell me.
But cost and sales, you said 20%, 25%, no, sir. We are going backwards, so we are taking as 20% on sales, sir.
No. Backward and forward has not got anything to do with it. How do you find out cost of goods sold? Okay. And I think you would have it would have been repeatedly on this point. 1/4 on cost is what percentage on sales and that. It's been Suman, you know that or not?
Yes, sir.
Is 1/4 on cost is 1/5 on sales. That much that you know. Right. It's simple. What I'm doing is I'm removing the profit element, finding out the cost because inventory is valued at cost. Correct. 5 lakh rupees when you're starting it is at cost. How can you minus selling price? You have to minus cost only. You have to add cost only. Correct, Suman? Whether you're
Yes,
going
sir.
forward or backward doesn't matter. Forward and what will you do? Costs you will minus. Backward means costs you will add. There is a difference. But how do you find out the value of the costs? You will find out the similar manner. Yeah. In both the scenarios, right? Say this was a forward question. Even then, your costs will be 80,000 minus 16,000, 64,000 only. Only treatment differs. You either add or minus from the total value of 5 lakh. That depends on whether it is forward or backward. But arriving at 64,000, the methodology will not change. Clear?
Yes, sir.
Thus, any other?
Delivered on later date, we would generally add it, no, sir, as goods in transit.
Sorry, your voice is not audible. Who's this?
Sir, Kirtana, you.
Please, Kirtana, tell me. Now I can hear.
If the goods were delivered on later date, we would generally add it as goods in transit, no, sir. Just because the goods are not delivered till date, we are not adding it.
Yes. Goods is no. Wait. What? Okay. Let me clarify this. See, the purchase is made. The purchase is made. Okay, it should form part of my stock even if it is not yet received. If it is goods in transit, also separate line item, you show it as a goods in transit and you do. Yeah.
Yes, sir.
Now, purchase. Now, what am I doing? I am subtracting. Correct. Because it is should not form part of 31st March because the purchase is done after 31st March. Correct.
Yes, sir.
A 5 lakh only, this goods in transit is not included.
Yes, sir.
So, therefore, I am not minusing it.
Okay.
You understand? So, effectively, I am not saying that goods in transit should not form part of my stock. It should form part of my stock.
Yes, sir.
But when I did a physical valuation of the stock, since it was not yet received, in that 5 lakh, this goods in transit is not included. When it is not included, why subtract it again?
Yes, sir.
Purchases have to be reduced. Correct. But this is not included only, so we should not subtract it. That's what this means.
Yes, sir. I understood, sir. But about that goods which were not delivered till date, about that, sir, if goods were delivered on a later date, we would generally add it as goods in transit. No, sir. Just because your goods were not delivered, we are not adding it here.
Even if it was delivered, you're saying if it was delivered later, you take it. No. Even if it is not delivered, you treat it as goods in transit. No, Kirtan, if you remember my class, what I told you, you will record it based on the actual accrual concept of the invoice. Yes, the goods, you start owning the goods, means it is purchase has happened. That means it is your stock, whether you have received it or it is in transit. When it is in transit, even if it is not yet received, say it is still in transit, then what do I say? Goods in transit and the separate disclosure I do and is still included in my stock. Correct, Kirtana?
Yes, sir.
It is included in my stock in the P&L. Okay. But here what is happening? Physical stock, when that storekeeper, when Kirtan has gone to the store, she doesn't know what is coming, what is not going. She doesn't have any idea. She will blindly go to the store, she will see what is there in the stock, write it and come. Correct, Kirtana? That is how you arrived at 5 lakh. So obviously in this 5 lakh, that is not yet included.
Yes, sir.
Okay.
Yes, sir.
Whether you have received it, not received it, that whether you would have received on a later date also, I don't mind. I don't care.
Yes, sir.
Is not included in 5 lakh. That is important. Okay, say other way around, say it was a forward case and the purchase happened on 28th March, Kirtana, and the goods were received on 5th April,
yes,
or it is not yet received,
yes,
it's
sir.
still in transit, even then you will include it.
Yes, sir.
Don't mix the two concepts.
Okay, sir.
In transit will form part of your inventory if the purchase had happened before. That is important. Purchase itself has happened later, therefore it should not be included.
Okay, sir. Thank you.
Thank you. Others, any other doubts? Are you clear? Yes. Can you quickly go through the other problems that are given that is given in your revision material? Yes. Tell me.
Yes,
Also
sir.
quickly check the page number.
66.
66. Yes, inventory. All of you open. Page number 66. On the following particulars, ascertain the value of inventories as on 31st March 2020. Okay. Inventory as on 1st April 2019, 3,50,000. Purchases made during the year, sales, manufacturing expenses, selling and distribution expenses, administrative expenses. Now, tell me, whether purchases will it include the cost? Yes, or no? Yes.
Yes, sir.
Manufacturing expenses?
Yes, sir.
Yes, sir.
Selling and distribution expenses?
No, sir.
No. Administrative expenses?
No, sir.
No, sir.
At the time of valuing inventory as on 31st March 2019, a sum of 20,000 was written off on a particular item which was originally purchased for 55,000 and was sold during the year for 50,000. So, as on 31st March 2019, 20,000 was written off. But this originally purchased for 55. That means this value of 3,50,000, right? This value of 3,50,000, don't you think it includes 55,000 minus 20,000? Yes or no?
Yes, sir. It includes.
It includes 55,000 minus 20,000, and this item was sold during the year for 50,000. Therefore, it is an abnormal item, and it should not. You should treat it separately. Did you understand?
Yes, sir.
Yes, sir.
Next. Except the above mentioned transaction, gross profit earned during the year was 20% on sales. Clear?
Sir,
That is why now what you will do. Now you check this. 3,50,000 in the. They will remove this 35,000 because it is abnormal in nature. You understanding? This 55,000 minus 20,000. Why? Because the original cost is 55,000. It was written off. 20,000 was written off as on 31st March. Therefore, 35,000 is still a part of 3,50,000. All of you understood this?
Yes, sir.
So, since it is abnormal in nature, it should be minus, and then you find out 3,15,000 as the opening stock. To this, you will add purchases and manufacturing expenses at 16 lakh. Then you arrive at 16 lakh 15,000. Clear? Next, from the sales also, you will minus abnormal sale item of 15,000. Correct? Sale is 18 lakh 50,000. Abnormal sale is 50,000. Therefore, normal sales is 18 lakh. From this, you minus gross profit at 20%. You get what is this? The cost of sales. Yeah. What you get is the cost of sales, and then inventory in trade as on 31st March 2020 is the balancing the differential amount 1,75,000. Even now we'll do it in the form of a trading account. Quickly open trading account.
Sir, gross profit is at 20%. No, sir. We need to take.
We'll do the trading account. Then your doubt will be clarified 90%. If it is still not clarified, that will be okay. Now write down trading account. Particulars. No, normal, abnormal. Then again, particulars, normal and abnormal. Rupees. Okay. Now we can write down debit and credit. Yes. Now on the debit side, write down opening stock. Opening stock. In the normal column, how much will you write? Rupees? Anybody?
3,50,000.
Yes, 3,15,000. Very good. 3,15,000. In the abnormal column, write down 35,000. 35,000. Done. Next, below that, write down purchases. Purchases in the normal column, 1 lakh. Yes. Purchases in the normal column, write down 12 lakh. Next, below that, manufacturing expenses. Manufacturing expenses in the normal column, write down rupees 1 lakh. Rupees 1 lakh. Next, on the credit side, by sales, is normal column. How many you write? How much will you write?
18 lakh.
18 lakh. Correct. By sales, write down 18 lakh. The abnormal column, write down rupees
50,000.
50,000. Rupees 50,000. Then on the debit side, you write down gross profit. Gross profit. First one in the abnormal column, how much will it be? 50,000 minus 35,000. Any closing stock there? Not there, correct? Yes. Write down gross profit. In the abnormal column, it will be rupees 15,000, correct? 35,000 was opening stock, it was sold at 50,000, so gross profit is 15,000. Clear? Abnormal column. Normal column. Write down. Here at 20%. This is separate line. Gross profit only. First you write abnormal. Then below that again gross profit at 20%. In the normal column, 20% of 18 lakh rupees 3,60,000. Shri Lasya, where are you? Yes. Vinay? Yes. Write down rupees 3,60,000. All of you done? Yes. Now in the right side, can you write down the closing stock? Right? Closing stock. Then bracket write down balancing figure. Balancing figure. Yes. In the abnormal column, write down 0. Is normal column now find out what is the total on the debit side? Total of the debit side in the abnormal column it is rupees 50,000, correct? Rupees 50,000. Normal column, how much it is?
19,75,000.
19 lakh
75,000.
75,000. All of you are getting the same thing? Pratiksha, did you get it? Pratiksha, no, you didn't get?
No, sir.
Yeah. In debit side, now I'll tell you one by one items. Just cross check. Opening stock is 3,15,000.
Yes, sir. Same.
Purchases is 12 lakh. Pratiksha. Yes. Manufacturing expenses, did you write? 1 lakh. Yes. Next, gross profit, how much have you written? 3,60,000. Add all of it.
Yes, I got it.
Got it? Yes. Total is how much on the debit side? Rupees 19,75,000. All of you got?
Yes, sir.
Yes. Yes. Debit side, normal column 19,75,000. Abnormal column will be 50,000. On the credit side also, abnormal will be 50,000. Done. Now in the normal column, find out closing stock as a balancing figure. How much it is?
1,75,000.
1,75,000 and total will be 19,75,000. Now did you understand? The same trading account, they are presented in the form of a statement. Everyone got to know how to arrive at the closing stock value? Yes?
Yes, sir.
Any doubts here?
No, sir.
Yeah? All right.
Sir, can you tell again gross profit, sir, of abnormal?
18 lakh into, here it is, if you can check, 18 lakh into 20%.
15,000, sir. How did we get abnormal 50,000?
15,000, 50,000 minus 35,000. 50,000 is the sale value of the abnormal sale item. Opening stock value is 35,000, correct? So it is 15,000. Yeah.
Yes.
Suppose that is clear, right? Oh. Shall I move on to the next problem then? Everybody understood this?
Sir,
Yes.
gross
Yes, sir.
profit. Sir, gross profit 20%. Gross profit 20% is only for normal sales, sir.
Yes, ma'am.
Okay, sir.
Because here, how can it be? Because they've given you the selling price and the cost also, no?
Yes, sir.
Except on the above mentioned transaction. Can you see this?
Okay, sir. So we are
Clearly
not.
given in the question. Okay. Next. Physical verification of stock in the business was done on 23rd February 2020. The value of the stock was 28 lakh. The following transaction took place between the. This is again forward, right? We're moving forward. Out of the goods sent on consignment, goods at a cost worth rupees 2,30,000 were unsold. Now tell me, this is my stock or not?
Yes, sir. Our stock.
Yes.
Our stock.
I've sent on consignment means it is my stock which is unsold. So I have to add it. Can you check this here? Add unsold stock of goods sent on consignment rupees 2,30,000. Here. Yes. Next. purchases of the 3 lakh were made, out of which goods worth rupees 1,20,000 were delivered on 5th March 2020. So, value of the stock as on 23rd February 2020 is 28 lakh, out of which 1,20,000 was delivered. Now, tell me, 1,20,000 is goods in transit, correct? All of you. 1,20,000 is goods in transit. Remaining, is it my purchase or not? Remaining also is my purchase. So both of them is added. This is what I was saying. Right? 1,80,000. So 3 lakh minus 1,20,000. 1,80,000 also will be added. 1,20,000 also will be added. Next. Sales were 13,60,000, which includes goods worth rupees 3,20,000 sent on approval. Half of these goods were returned before 29th February 2020, but no information is available regarding the remaining goods. Yes, open your notebook and write down and give a working for this. Sales. So give the problem number first reference. November 2020 problem. November 2020 problem, page number 67 of your revision material. November 2020 problem, page number 57. Okay. Yeah, write down. Sales is 13,60,000. 13,60,000. For this, draw 2 arrow marks. Okay. Left hand side, goods sent on approval. Goods sent on approval. Rupees 3,20,000. Rupees 3,20,000. Draw again 2 arrow marks. Left hand side, returned before 29th February 2020. Returned before 29th February 2020. Rupees 1,60,000. Returned before 29th February 2020. Rupees 1,60,000. Right hand side. No information available. No intimation received. No information available. Rupees 1,60,000. Rupees 1,60,000. Next, on the right hand, complete right hand side, write down other sales. Other sales. Yes, 13,60,000 minus 3,20,000. 10,40,000, correct?
Yes, sir. 10 lakh.
10,40,000. For this, again draw 2 arrow marks. Arrow marks. Abnormal sales. Abnormal sales. Abnormal sales. 2,40,000. 2,40,000. Sorry, 2,40,000. Abnormal sales is 1,50,000. Abnormal sales 1,50,000. Next. Right hand side, normal sales.
8 lakh.
Normal sales. Yes.
8 lakh
8 lakh
90,000.
8,90,000. Normal sales is 8,90,000. Now, first one. Now, under goods sent on approval, there are two. One is it is returned before 29th February 2020. What should be done with these goods?
So subtract.
If it is returned before 29th February 2020, what should I do? First question is whether it was a part of the inventory when it was taken on 23rd February 2020.
No, sir, it must be added.
Now listen, first on 23rd February, very important is when did the sale on approval take place? Right? Here, if you read the question, it says the value of the stock was 28 lakh when the inventory was taken on 23rd February 2020. Okay. Then it says the following transaction took place from 23rd February to 29th February 2020. Right? That means sale also was done. That is, this 3,20,000 was done during the period. The entire 13,60,000 was done from 23rd February to 29th February. Is this understood? Entire 13,60,000 was done during that period, and out of which 3,20,000 was set on approval. Here, and half of it returned before 29th February 2020. You understand? That means what? This formed a part of my inventory as on 23rd February. Now, in that sale transaction, if you minus the entire sales, I mean, as on 29th February, it is still forming part of my stock, correct? Yes or no?
Yes, sir.
As on 29th February, it is still forming part of my stock. So, therefore, I should not be subtracting this. All other sales will I subtract? Yes or no? This one I will not subtract. Clear? Yes. Next. Other part. What is that? That is goods sent on approval basis and no information received. Will that be treated? I mean, no information received. Will it form part of my stock or not?
Sir, it will form a part.
No information received. Will it form part of my stock? Yes or no?
Yes, sir. Inventory lying with
It will form. No intimation means ICSR account has to be debited, correct? That means it is my stock. All of you are understanding this?
Yes, sir.
So technically what you have to minus is only the other sales. You understand? Yes. Technically what you have to minus it only the other sales. But presentation wise what they have done is they have added the goods sent on approval but no information received. Okay, because on stock under they're adding and when they're subtracting also in the sales they've included it. So technically if you see they're adding and minus. Right? Add to ಮಾಡಿದ್ದಾರೆ minus to ಮಾಡಿದ್ದಾರೆ. If you check the answer here, yes, what have they done? They have added here. Can you see this 1,28,000? Obviously they'll add only the cogs. Okay, they're adding only the cogs. But in 13,60,000, if you see they're not minusing 3,20,000, they're minusing only what is returned. You understand? So they are adding as well as minusing. All of you understood this part? It is just a presentation, but technically only the other sales has to be subtracted. Everybody understood? Anyone has any doubts in this?
Sir, here it is giving us the nullified effect only, no sir.
Here?
It is a neutralized effect only, no sir.
Yes, ma. Yes. The presentation is. Yeah.
Okay, sir.
Now what you have to do is you have to find everything at cost. That's all. So most important, in the other sales, here you write down other sales only, normal sales, find out the cost. COGS, by the way, COGS short form, COGS, cost of goods sold is equals to the normal sales. What are the normal sales?
8,90,000.
It's 8,90,000. COGS is much? Into 80%, because 25% on cost and then 20% on sales. Into 80%. This is one of you tell me the answer.
7,12,000.
7,12,000.
12,000.
Okay. Next, the normal cost of goods sold is abnormal one. The cost is COGS they have given in the question already 2,40,000. Write down 2,40,000. Got it? 2,40,000. Next, right hand side on sale on approval basis. For both, you put a downward arrow mark and write down. For the no intimation one, for that you write down downward arrow mark. COGS is equals to, for no intimation. No intimation. COGS is equals to 1,60,000 into 80%. How much is that? 1,60,000 into 80%.
1,28,000.
1,28,000. Now add all these three. No intimation plus no intimation you add. Add normal sales and abnormal sales. 2,40,000 and 7,20,000. Connect all three and write down. What is the COGS?
10,80,000.
10,80,000. I hope now you understood how in this answer we have got 10,80,000 here. Have you understood? Yes. But most very important is this 1,28,000 has to be added. So, like I said, net effect is actually only other sales has to be subtracted. Because whatever is sent on approval, whether it is returned or if it was accepted, then it was different. Since it is returned, I have no intimation, both of it is my stop. Yeah. If anyone has any doubts in this question?
Sir, the total amount of 10,80,000, how did we get it, sir?
You have to be louder, ma. I can't hear.
Sir, the total amount of 10,80,000, how did we get it, sir?
ಅದೇ ಮಾ ನಾನು ಇವಾಗ ಆರೋ ಮಾರ್ಕ್ ಹಾಕ್ಬಿಟ್ಟು ತೋರಿಸ್ತೆ ಅಲ್ವಾ no intimation normal sales to COGS add all of it is 10,80,000. What is your doubt?
Okay, sir.
Here you add all the three arrow marks, that is 10,80,000, no?
Yes, sir.
Yes. Okay. Here, if you see calculation of normal sales, they have done 13,60,000 minus abnormal sales of 1,50,000, return of goods on goods sent on approval. If you see, that is how they have got 10,50,000, then calculation of gross profit they have done 1,20,000. Okay. Now already my working note is enough. Do you all understand my working note, all of you? And working note in the chart format, like that only you can use and then present it your main answer. This is if you don't have to do it in a table format. Clear? Chart and very easily you can understand. Yes. Okay. This is X, Y, and Z are in retail business. What is this? Adjusted selling price method. Okay. And following information is obtained from their records. Goods received from suppliers subject to trade discount and taxes 15,75,500. Trade discount 3%, sales tax 11%, packaging and transportation charges. Sales during the year is given. Selling price of closing inventories is given. So if you remember, you have to prepare the trading account and value the closing stock at the selling price itself and then find out what is the gross profit percentage. Nvidia. Okay, now see. Okay. Do one thing. Prepare a trading account only and do it. It will be easier for you. Just draw up a trading account. Then you can write down computation of gross margin percentage. Okay, computation of gross margin percentage. Okay, particulars amount. Particulars amount. Left hand side, write down by purchases. Sorry, two purchases. Two purchases. Within bracket, calculate the value 15,75,500 into 97% into 97%.
14 lakh
15 lakh 70.
1,30,000.
Sorry, that's 15 lakh 75,500 into 97%, and that whatever the resultant figure, that you have to multiply into 111%. That is what?
15 lakh 20.
1 second. 15 lakh 75,500. From that into 97%, and then multiplied into 111%. That we will add 87,500. I repeat, valuation will be what? Within bracket 15 lakh 75,500 into 97% into 111%. What is 111? Sales tax of 11%. When I add, it becomes 111. Clear? Into 111%. Okay. That when you write plus 87,500. Find out what is the value.
16,76,170.
Use your calculator.
17
Adjust
lakh.
to calculator. Take out your all of you. Wait. All of you take out your calculators. Press AC 0 ಮಾಡಿ ಅದನ್ನ. Keep doing what I say. 15 lakh 75,500, right? 1575,500 into 97% or 0.97. Okay. Again into 111% into 1.11. This is equals to, okay, now put plus add ಮಾಡಿ 87,500, then write is equals to. Now tell me the answer.
17,83,841.
Everyone got same answer? I think first time all of you would have got same answer. Then if I ask, you would ask for the answer before this, one person will tell one more answer, then another answer. Ellaru gottaita how to calculate, how to use calculator you learned today. Okay, 17 lakh 83,840. 17 lakh 83,841. So by purchases, write down 17 lakh 83,841. This thing you have to show it as a working note. Can you do it? All of you will do. Below, show down working note, computation of purchases later. Okay. Within bracket working note number 1, you write working note number 1 and leave space. Do it as a homework. Clear?
So could you please repeat that calculator process? I didn't get the right answer.
15 lakh 75,500. Write down. I'll repeat again. 15 lakh 75,500 done. You keep answering. Don't mute yourself till I say. Okay. Multiplied with 97% or 0.97.
Yes, sir.
Don't mute. Okay, into 111%. Okay. Don't write is equal to now. Just do as I say. Into 111%.
Yes, sir.
Now press is equals to.
Yes, sir.
Now press plus 87,500.
Yes, sir.
What is the answer you got?
1783.
841. Right.
Yes, sir.
That means what am I doing? 97% andre now understand the meaning also. 97% means after removing 3% trade discount. 111% means 100 plus 11. 100 minus 3 is 97. 100 plus 11 is 111. Clear? Of you. That is adding sales tax, and to that I will add packaging and transportation charges of 87,500. I get 17,83,841. I hope everybody understands. So in now coming back to the trading account, my purchase is 17,83,841. Okay, next, sorry, 2 purchases. Next, my sales. My sales 22,45,500. 22,45,500. Just below that, by closing stock at selling price, The closing stock at selling price 2,35,000. 2,35,000. Therefore, write down on the debit side to gross profit. Gross profit. Total the credit side, how much it is? What's the total of the credit side?
24,80,500.
24,80,500. Correct? All of you got it? 24,80,500. Okay. Next, the debit side, gross profit. Tell me.
6,96,659.
Total will be same. That is 24,80,500. All of you done? Yes. Next, below that, write down. Therefore, gross profit percentage is equals to gross profit percentage is equals to
Gross profit divided by sales into 100.
no, not sales. 6,96,659. 6,96,659 divided by. How will you divide it by? Anybody?
24,80,500 into 100.
Yes. Why? Because you're assuming that closing stock also is sold. Arthaita? In closing stock, otherwise, why will you value that selling price? You value that cost, correct? You're assuming that closing stock also is sold. So you add it to the sales and then you take 24,80,500. Did you understand? Only then you, otherwise, gross profit value is wrong, no? Right? If you take only the sales, then it is wrong. You have to take both closing stock as well as sales. Then you get the correct gross profit percentage. Okay, write down. Divided by 24,80,500. Gross profit margin percentage is equals to how much?
28.16.
28.09.
28.08.
28.85
0.85.
something is 09. Okay. 28 points. Everyone got the same answer?
Yes.
28.09. 28.09%. Below that, write down. Closing stock value. Closing stock value. Computation of closing stock value. Under that, closing stock at selling price. Closing stock at selling price rupees 2,35,000. Rupees 2,35,000 less this gross profit at 28.09%. Yes, gross profit at 28.09%. Yes, multiply 2,35,000 into 28.09. How much it is?
₹66,01,150.
56,000.
So 66,011.
66,011. Correct. 66,011. Write down. 66,011. Therefore, closing stock value at cost.
Excuse me, sir.
Yes.
Sir, can you once again tell how to calculate that 28.09% like profit margin?
At simple. The gross profit value 6,96,659. Did you get that?
Not that, sir. 66,011. That value.
ಅದನ್ನೇ ಹೇಳ್ತಿರೋದು 66,011. 2,35,000 is the selling price of the closing stock. Okay. Multiply that into 28.09%.
Okay, sir.
You get it?
Yes, sir.
Sir,
Now, what is the closing stock value at cost?
1,68,988.
1,68,988. All of you got this answer?
Sir, gross profit percentage I'm getting as 28.16.
Everybody is getting some other answer then. All of you, you use your calculators? Same. Okay, I'll do it. Wait. What is the value here? 6,96,659 divided by 24,80,500. 28.0854 ತೇಜಸ್ವಿನಿ ಏನೋ ತಪ್ಪು ಮಾಡ್ತಾ ಇದೆಯಾ ಅಷ್ಟೇ ನೋಡ್ಕೋ 6,96,659 divided by 24,80,500. Okay, correct. All of you understood? Anyone has any doubts? Clear? Yes, that's it.
Sir, it's 28.08, no, sir?
0854 ಅದನ್ನ ರೌಂಡ್ ಆಫ್ ಮಾಡಿ 28.09% ಬಿಟ್ಟಿದೆ.
Okay, okay, sir.
Okay. Yes. Okay, now switch on. Quick. Switch on your cameras fast.
So what is the last value, sir? 1,68,000.
1,68,000. Same answer is there in your revision material. Same answer, all of them we've got. 1,68,988. Have you got the same answer? 1,68,988. Okay. Any more doubts? Any other doubts? All clear? Yes. One last time. All the best to all of you. Study well. Okay. Now, about tomorrow's class, right? Whether you have or not, most probably it will not be there if there is no intimation received. Clear? At 5 o'clock tomorrow, if you receive an intimation, that means you have a class tomorrow. Otherwise, no class. Clear? Yes. All of you till Sunday, make sure that you have completed whatever is covered by Shetty sir and me. Clear? In the last 3-4 revision classes, whatever has been covered by me and Shetty sir, make sure that you have completed those portions by in the next 2-3 days. By Sunday, you should ensure that everything is completed. Now, no going back. Yes, no slowing the gear down. Class illa slow madodantalla. Yes, this is the revision class already. I know that we have told you to complete, but I know that none of you have completed whatever me and Shetty sir have done. Correct? You're supposed to complete. I know you have not completed. So you are getting the chance now. Till Sunday, make sure everything is complete. Whether tomorrow you have a class or not, if no intimation is received, it means you do not have any class. Understood? Intimation sikkir andre don't tell that ayo idiyo illo anta illa ashte. If you get an intimation, that means class is there. Okay, tomorrow by 5 p.m. if at all it is there, you'll get an intimation. Otherwise, no class. By still Sunday, continuously keep reading in the same pace. No reducing the pace. Move to the next gear and make sure everything is complete thoroughly. Shetty sir in the first class has told you know what all things in the first revision class has told. Enen odbeku, from which material, what you have to cover. All those things you have to cover for the topics we have covered so far. Clear? Ensure everything is done and dusted once and for all. It's not that you'll come back to this again. You should read it in such a way that now there is no more revision. Correct? There revision. Yes. So you have to prepare for the examination, to prepare in such a way that next day if the examination is there, you should be able to score fully. Prepare. Okay, na? Examination is not in June. Or accounts, ಬೇರೆ subjects ಇಲ್ಲ ಓದಕ್ಕೆ accounts ಒಂದೇ ಇರೋದಾ ಅಲ್ವಾ? So accounts when you're prepare in such a way that next day if the examination is there, you should score out of out. ಆ ತರ prepare ಮಾಡಿ. Okay? All the best to all of you. I know that all of you will pass with very high marks. Thank you so much, everyone. Anyone has anything to say, you can say. Otherwise, that's it. Okay? Thank you. Bye, all of you.
Thank you, sir. Bye, sir. Thank you.
Bye, sir.
All the best to all of you.
Bye, sir.
Thank you, sir. Bye, sir.
Bye.
Thank you, sir.